Hello and welcome. In this video, we are going to look at how to interpret stock ratings. Now, you would have definitely seen stock ratings like buy, sell, hold, accumulate, reduce being recommended by a variety of stockbroking houses. But very few times we really give attention to what is their interpretation. The only interpretation that we have about buy is if somebody is recommending a buy on TV or in some report, then it means you should buy the stock. And somebody is recommending to sell the stock, then you should just mean that you should sell the stock whatever you are holding without really thinking about what does it mean in terms of the returns recommendation by these broking houses or the reports released by the broking houses. So there is an interpretation of these ratings that every brokerage house gives, and that is what you should seek when you are looking for or when you are looking forward to follow some of the advices like buy, sell, or hold. Now, typically, a buy means greater than 15% of returns relative to Sensex. Now, the key term is relative to Sensex or it could be any broader index. Hold, or before that, let me say sell. Sell means greater than minus 15% returns. Okay, means minus 16%, minus 17% returns relative to Sensex. Hold means plus minus 5% relative to Sensex. And then there are some ratings created for the convenience of analysts, kind of reduce or accumulate, where the view is not as clear as buy, and it is also not hold, where they give the rating as accumulate. And when the view is not as clear as sell and not even hold, then they give rating called as reduced. So in accumulate, the stock is expected to give returns in the range of plus 5% to plus 15%. And on the other side, they are expected to give returns in the range of minus 5% to minus 15%. Now these are the rating scales that you should seek when somebody is recommending a buy to you. Now this 15% is a benchmark typically because broadly Sensex is expected to give 15% returns or 14 to 15% returns in the long run. And with respect to Sensex, if you invest into Sensex portfolio and if you are getting 15% returns, so that is a fool's portfolio, or anybody can do that replicate the Sensex portfolio and stay invested, and you will any which way make 15% returns. So the thought process behind buy is if you are getting 15% over and above the Sensex returns. So if the Sensex is giving 15% returns and the stocks is giving over and above that 15% additional 15% returns. So in the absolute term, if the stock is giving 30% returns in this particular case, if we are assuming then the Sensex is giving me 15% return, then that becomes a buy. Let us have a look at a typical cases where we will see what kind of stock recommendation would be a buy and in what market scenarios. Okay, similarly the thought process is about sell, that if the stock is giving you lesser than minus 15% returns, then that is called as sell. And from brokerage houses to brokerage houses, this percentage may differ. So somebody may say from plus 5% to plus 10%, and buys greater than plus 10% returns depending on their own views. Now let us look at some examples based on this rating system, uh, how stock returns and index returns will help you to compute the ratings. So let us say I am writing stock returns over here and index returns over here. So let us say the stock is expected to give me 4% returns and index is expected to give me 15% returns. So with respect to index, so I will say relative return over here. With respect to index, the stock is giving me minus 11% returns. So how did we calculate that? I said 4% minus 15%. So relative to index, my returns are minus 11%, and hence the rating falls between minus 5 to minus 15%, and the rating becomes reduced. Now let us say I am saying the stock is giving me again 4% returns, and the index is giving me 20% returns. In this case, the relative returns become minus 16%, and this becomes a case for sell. Now see the other scenario. If the stock is giving me minus 4% returns and index is giving me minus 20% returns, in this case my relative returns become plus 16%. Now how is the calculation done? It is done like this: minus 4% minus of minus 20%. Okay, and that is of 16%, and this becomes a buy case. And let us say I am saying stock is giving me 10% returns and index is giving me 8% returns. So in this case my relative returns are plus 2%. Okay, so plus minus 5% returns is a hold case. Okay, so how did I calculate that? 10 minus 8%, so hold. That is how you will give ratings to different set of stocks. So when you're looking at any of the brokerage houses report here onwards, or when you're listening to any new channel which are recommending buy, sell, hold, reduce, accumulate, then always keep in mind what is the rating scale that they are recommending. So what kind of return can I expect from this stock, and why it's a buy rating. Okay, I'm explaining that thought process once again. The thought process is that if you invest in a stock, you make x% return, and if you invest in index, you make y% returns. Let us say for the sake of discussion, now investing into index is what anybody can do. What I mean by anybody can do is, let us say index has 50 stocks or 30 stocks, then you can replicate this portfolio in the same weightage as that of the index, and that will yield you returns that index will yield. So there is no brainer in terms of replicating an index. But analyst is the community who say that investing into index is a very passive strategy, and if we think actively, we can recommend you some stocks which can give you better returns compared to that if you are invested into index. And that's why they will do research on this stock, and after the research they will recommend that the stock will give you certain x% ratings, and these x% ratings then you need to compare with y% ratings, and based on the expectations in the returns between stock and index, the rating scale is arrived. And that is the rating scale which we saw in the beginning of the video over here. Now you should keep this in mind, that what does a buy mean, what does a sell mean, and what are the other different ratings mean when they are being recommended, and then wisely understand what is really being conveyed. There are a couple of aspects that remain unaddressed in whatever we have discussed so far. One critical aspect is that who decides what is the expected returns from the index. Normally, when you are using a relative scale which is considered to be a superior scale compared to absolute scale, the brokerage house which is using relative scale needs to have view on Sensex or broader index return that they are referring to, and based on that they need to have view on how much returns the index would give in, let us say, next 1 year span. And based on that return, so let us say the stock broking house says that the expected returns from index are 15% or 10% or 20%. So based on the view of that stock broking house for index return over next 1 year, their ratings on stocks are relative to these return expectations that they have on index. So these ratings are relatively better compared to the absolute ratings that some other stockbroking houses may use. So typically you would see that these rating the stockbroking houses give are given at the bottom of their report, or near the disclaimers that they would make, that what does this rating mean. And some brokerage houses may use the absolute scale as well. Okay, so what how this absolute scale may look like, I'm just trying to explain over here. So let us say they may say a buy, sell, and a hold. Okay, and a buy mean absolute 10% returns, a sell means minus 10% returns, and anything that falls between these two they may categorize it as hold. And similarly they may have ratings for accumulate and reduce in the similar fashion. Now this is absolute scale. Okay, so we really don't worry about how much returns the index would make, and we just stock specific. Okay, so this is entirely about stock. We really don't worry about what is happening in the index. So however we believe that the better rating scale is what we defined earlier, which is relative scale, which is relative to Sensex. Okay, apart from that, I also wanted to share that there are other typical words used as a replacement for accumulate and reduce, which I will try to explain over here. That people may call accumulate as outperform. They may call accumulate, which also says that overweight. Okay, then there are other names for hold, or something similar to hold is market perform. That means that the stock is broadly expected to move in line with how the markets are expected to move. And underweight, sorry, my mistake, and here it is neutral. Okay, on the reduced side the rating goes like underperform and underweight. Okay, now please remember these are with respect to Sensex. Okay, so you would also find most probably these rating scales are used when the index when the rating scale is with respect to Sensex and it is not absolute. Okay, so also I believe that uh, accumulate, reduce, these kind of ratings will come place only when the rating scale is relative to Sensex. In absolute scale you would only see ratings like buy, hold, and sell. That's about it for now. Thank you. Please share your questions, counter questions, difficulties in understanding this, so that I can reply to your questions. Thank you very much.